Hello guys, welcome back to my channel. This is your girl Dan Schmella. So in my previous video, the one talking about my best performing stocks, I'm gonna put a link of it right up here. I did mention Zynga and the fact that its stock price fell despite beating expectations and having a great earnings report. And so a good friend of mine approached me and told me that maybe I should elaborate on that for my viewers. So I decided to do a video on that as to why stock price for companies usually drop after a good earnings report. Let's go ahead and get right into today's video. So I've always been puzzled as to why whenever, especially when I started, whenever I invest and after a great earnings report, I wonder, why is the stock price falling? Like, why is it falling? Like, I mean, it's doing great. Looking at the numbers, it's doing great. The company is doing great and things like that. But why is the stock price dropping the day of the earnings report or after market hours? And that always puzzled me and intrigued me. And most of the time, I always thought that, well, maybe that's because there are some investors that are just ready to dip out just because they have made their profit and that's it. And that's usually what causes the stock price to fall. But after looking into it with time, I got a better idea as to what's actually happening. And I'm going to go ahead and talk about that and possibly come up with some real life examples for the different cases and scenarios that I have for you guys. So there is this adage in the stock market that says, buy the rumors, sell the news. And so what it's pretty much talking about is analysts have certain numbers, expectations, and figures that they think the company is going to meet at the end of the quarter. So they have their quarterly expectations from the company, and they usually at the end of the earnings report, those quarterly expectations are actually compared to the actual earnings report. So usually analysts have expectations of what a company is supposed to report as its profit or loss or cost and things like that. And so usually those numbers, those expected numbers are compared to the actual numbers at the end of the earnings report. And so what happens is that some analysts can be bearish. No, not bearish. I'm sorry, I said that. So what actually happens is that some analysts can be bullish and so expect the company to do good, to do well. And sometimes those companies actually beat those expectations or actually meet them. And so what usually happens is that for some investors, because those companies have met those expectations, or even better, they have done way above those expectations, they go ahead and cash out on their shares and make a lot of money at that time. So for them, they are more into like on a short-term basis. They are more interested in making their money at the end of the quarterly earnings report rather than waiting in the long run and see what happens. And so sometimes because of that, the stock price of that company usually falls. So a good example for that is, say for example, Apple. So when Apple actually went and did the stock split, right before its stock split, the price of Apple is soared I'm going to put a picture of it right here to show you guys a comparison. So price of Apple actually rose at the news at the announcement of the stock split. Now, after the stock split, you can actually see how the price of Apple fell below what it had actually reasoned from. And I mean, after that, it also released the new iPhones and things like that. And it hasn't been doing so well in terms of sales as compared to previous years, which has kind of like stabilized the stock price of Apple at a certain level. But you can kind of see what I'm trying to refer, or what I'm referring to as, during that gap between where it announced a stock split, and when it actually performed that stock split, and see how the stock price progressively went down. Another reason why a good earning report can potentially lead to the stock price falling is lowered guidance. And so this one I actually learned it from Zynga. So what lower guidance is pretty much saying that sometimes on the earnings report, you will see how the top company talks about how well revenue has been great. Say for example, for throughout the third quarter, which is what most companies are releasing at the moment, releasing their third quarter earnings. So say for example, you take out the quarter the. So say for example, you take a look at Zynga's third quarter report. You will see how it talks about how it has made a lot of revenue. It has had increased number of subscribers and things like that. However, after releasing that third quarter earnings report, the stock price actually fell. And the reason why it fell is because lowered guidance. What it actually means is that for the future, looking at the future prospect for Zynga, at least in the near future, it is not expecting the same number of revenue growth that it has experienced previously. So comparing its third quarter earnings numbers now to versus its next quarter earnings numbers, it is pretty much saying that there's a chance it's not going to meet those same numbers in terms of like it's probably going to meet them in terms of like it's probably going to be a lot lower than what it has done before. And so what usually happens or in this kind of things is that because the stock market is all about future and betting on the future, a lot of investors decided to sell out their stocks in Zynga. And it's the same thing for companies like Netflix and Zoom, because they have reported great quarterly earnings, crushing numbers and expectations, adding subscribers growth and increasing revenues way beyond expectations. Because they have done that in previous quarters, now reporting numbers lower than those great quarters figures causes their stock price to fall, because investors are more of like, okay, since the company is already saying that they possibly will not make the same figures in the future or in the next year or two or in the next quarter, then the immediate future for those companies looks sort of gloom in terms of like a lot of investors are selling their stocks. Now for a company like Zynga, on the other hand, it has acquired a few number of companies, and so if you're in it for the long-term run, then definitely you are going to make your money, because the way the company has structured itself, it's making the necessary moves to sustain long-term growth, which is what you actually want to invest. And personally, guys, from my own experience, it is much more profitable to invest for the long run than for the short term. Honestly, that is my personal opinion, but hey, you do you, I'ma do me. So our takeaway from this is that you want to look into the earnings report. You don't just want to look at the surface, like, oh, did the company beat expectations or not? Are the numbers higher than what we want or not? Sometimes the company actually, yes, it does a lot better than expected, but in the future, in the long run, just because that company has done great today doesn't mean that it's going to do great tomorrow. So sometimes it might be a good time to sell your stocks, or it might be a good time for you to know what you are getting yourself into. And so if you're interested in staying in that company or keeping your shares in that company, then brace yourself for that. So the last thing I want to leave you guys with as to why a good earnings report for a company usually leads to a fall in the stock price is because there are some external factors. So in terms of like political forces, or materials, raw materials that are being used and things like that. So a good example for that is Fastly. So I know I talk about Fastly a lot, I'm sorry guys, but so back in the summer when Fastly announced on its quarterly earnings report that its biggest customer was TikTok, what happened shortly after that was that Trump decided to ban TikTok, and that meant trouble for a company like Fastly. And so what happened, as you can see on the picture right here, is that after that, a lot of investors decided to sell their stocks because of the political pressure that implied or that was affecting the stock of Fastly at that moment. And that is a good example of how external factors can affect a stock price. Another thing is an example like when you look at Casper mattress versus Purple. So Casper mattress buys its raw materials from other people or from other companies to make its mattress, versus Purple, which actually controls its raw materials all the way to its production and sale of its mattress. So there have been a shortage of raw materials to make the mattress, in terms for at least for Casper's. And because Casper has been faced with that challenge, you can see how the stock price has fallen even further as compared to Purple's stock price, despite the fact that both, despite the fact that right now, at least in the summer, for example, there was a boom, or there has been a boom of home goods and mattress sales and things like that. So our takeaway is simply this: sometimes there are external factors that affect the company's stock price, be it political pressure, or raw materials, or any other thing, any external factor that can affect a company negatively can drag that company's stock price down, despite the fact that that company may be crushing expectations. And so you want to look out for that. If you are an investor in a company and you own shares in that company, you have access to the earnings report, and it's always a good thing to take a look at it and see what it says. I mean, if you are not willing to read the 20 plus pages, sometimes they are 20 plus pages. If you are not interested in read all those pages about on the earnings report, you can always look up to see what is the summary. Or what I usually do is Control F. I Control F a lot of things on the earnings report to see what exactly was going on. I usually use keywords, but yeah, Control F, honestly. Now let's talk about what if a company registers a low or poor performance on its earnings report, but you see the stock price kicking it up. Now, a good example for that is a company like Disney. I don't believe they have announced their third quarter earnings report yet, but I know that when they announced their second quarter earnings report, revenue was down by a lot. I want to say over 20% compared to previous earnings. Disney is down by 61% in revenue. That is $2.6 billion from its parks, experiences, and products. So all its resorts are currently closed, as well as the parks, Disney World and Disneyland and things like that are all closed due to COVID and things like that. But you can see that even despite reporting low quarter earnings, the stock price actually rose. A good way of putting it is that you can see how a lot of the investors have bought into the Disney motto. Yeah, you have to believe to see it. So they are strongly believing that it is only because of the pandemic that Disney is down. And now when they look at its new profit puppy, which is Disney, the Disney Plus, subscribers have grown, and I believe Disney was projecting for 74 million subscribers over the span of 5 years. But by the time they're reporting their fourth quarter earnings report, I think it's the fourth or the third quarter's earnings report, they had already grown by over 74 million new subscribers on their Disney Plus platform. So they beat their 5-year projection by a couple of months, or in a couple of months, which is crazy. So it's one of the things I think that actually drove the stock price of Disney up. But this is one of the cases where it's like you see that the company is not meeting expectations, is doing way below what it has previously done in terms of revenue and profit. But the stock price of Disney keeps on rising. I hope you guys enjoyed this video. I hope it helped shed some light as to understanding what happens to a company's stock price, especially when it reports a quarter earnings, and what to look out for or watch out for when on those quarter earnings. And a good tip for you guys is Control F. I'm telling you, Control F. Use keywords and Control F everything out on that quarter earnings if you don't want to read everything. I personally don't. So let me know what you think in the comment section down below. Let me know if you also want a video on what factors to keep an eye out for whenever you are picking out your stocks to invest in them. Comment in the comment section down below. Tell a friend to tell a friend. Remember, I want us to all grow and make gains together. Thank you guys for watching.